All right, traders, welcome to today's recap. This is Christian from Stomach and Trade Group, and it is Monday, August 8th. So let's start with the price action in the indices. And first things first, risk disclaimer in front of you. Make sure that you read the whole risk disclaimer, but everything that we're talking about in this video is for information purposes only. Well, it ended up kind of being trying to think of the right adjective for it, but I guess a fade from early strength is probably the right thing. But things kind of held in there and didn't really break down. S&P was just slightly in the red for the session. The Qs were down a little bit more than that. They finished down 30 basis points. And the small caps continue to outperform. We've been seeing that now. I think it's about 2 weeks. I know it's been longer than a week because I've been talking about it. I talked about it a few times last week. That and the micro caps have been leading as well. Here is a chart just so that you can see what this looks like in terms of, over the last couple weeks. You could see that you've got this outperformance. And again, it kind of looks like a lot of stocks that we're seeing right now where they've gone sideways. They've been basing for a couple months, and although this is a longer base than that, and it does look like some type of head, maybe left shoulder. I don't know. We don't exactly have a right shoulder, but these head and shoulders or inverse head and shoulder patterns aren't exactly perfect. But it does looks like some type of consolidation and trying to kind of move higher. So overall, I think that's not a bad relationship to see the small caps outperform and to see some things going on. Keep in mind the biggest sector weights in this small cap ETF is financials and biotech, which has been making all kinds of moves. So you can imagine, and I think the biggest mover in IWM was KRTX today to the upside. So that certainly helped the performance. But remember, IWM is 2,008 or close to 2,000 names in it. No one name is going to drive the overall small cap ETF. So again, sectors can do it, but usually not. One or even a couple particular names don't usually drive that ETF. So that's where there's been outperformance. The VIX, which it shouldn't really be in the green, the VIX was kind of green all day today, but remember it was red on Friday, and the market was down on Friday. Sometimes you get this kind of weekend. It's a little bit odd. Sometimes we see a lot of times that the VIX is up on, down on Friday, and the indices are down on Friday too. So you kind of have to weed out the noise. And sometimes if it's just plus or 1%, I kind of ignore it. The strength today was in, I have up here theme of the day, a lot of short squeezes going on. I wish I had a great reason for why we're seeing so many of that, but my main thesis behind the move is that as some of these names have reported earnings, I've been going through, and I'm surprised to look at the short interest. Carvana was a good example of that on Friday. I mean, some of these names have well over 20% short interest. So if they happen to say anything positive on earnings, the shorts have just kind of loaded up on all these names that the name is going to fly, like we've seen some of these names do. Now, the shorts are also right sometimes too, even though looking at things in terms of a risk reward perception is the best way, or perspective, is the right way to do it, right? A lot of times I was listening to somebody this morning, I think it was Ben Zinga, and they were talking about risk reward is a big thing in trading. So when you see a name reports earnings, right, or if it's got some type of a catalyst, and you look and you see 25 or 30% short interest, right, the risk reward is no longer to the short side, right? Now, again, nothing is 100%. Upstart had a huge short interest, and they missed. I mean, it doesn't mean that just because they have a big short interest that the stock is going to, the fundamentals are going to perform well. But interesting, this thing is actually already recovered, and it's back to 31. And that could be the case. Is that there's just so many. It's a crowded short at this point. So it's important to look at these things, right? for the squeezes, and also if you're shorting to say, hey, how many other shorts are involved in these funds. But the numbers were not good. I mean, the numbers were very bad. And by the way, a lot of names that reported after the close today, they're kind of, at this point, we're getting to like the second tier, third tier. Not every name, but a lot of things that were reporting today. Let's see if I could get changed down here. NVAX also down very decently. But if you look at some of these names, like a triple D, right? DDD is down. And if you go through some of these names, some of like Clover. Now, I don't know if I guess they did report earnings, but STC, right? These are not your top tier names. These are names in heavy downtrends. Now, again, names can come out of the downtrends if they've got, good results. But what I'm trying to say here is just like second and third tier names are gonna have a tougher time doing it, because there's a reason why some of these names have really been beaten up. Again, just putting things in perspective. Some names should be trading down as low as they are because they really shouldn't have been higher in the first place. But that's the market that we've been dealing with over the last couple of years. So let me get to the price action in the indices, because I kind of skipped over that a little bit. But so yes, these are difficult trading days when we start and we're really hot out of the gate. And then things kind of simmer down. It does beg for some profit taking when we see so many names that are ripping up 5 to 10%. Sometimes you will see pretty heavy profit taking, and that's why I'm always a net seller on when you see this. And I even got out of some positions, even though they weren't for major winners. I got into Nucor last week. I got it. I got into a couple metals and mining type names last week because they were showing some nice strength to them. Now, I think I could have stayed in this tech resources. But again, when I see something gap up like this, and if there's no catalyst for it, I'm usually selling. I still like this Nucor, but look, I mean, Nucor finished down. Right. So half of these things, I think, unless you really have a lot of conviction, right, and you've done your research, if you're just in some of these things for a trade, I mean, I sold this Nucor at 139.5, and you could see it gave it all back today. So, that's the name of the game. But I am very hesitant to get into some of these positions, but we just saw a lot of strength in things like ZS in the beginning of the day. And again, you have to be quick with some of these things because ZS still finished up 3%, but right off the open, trading at 165 and traded up to 176 in the matter of about a half hour. So if you're not selling into that, something moves that quickly, right? And in this market where the Fed is still doing its thing, right, is still going to be a headwind for this market, right, until we get some other data or some other pivot that says otherwise. But that's a very nice result. If you happen to be in something like this from previously, or even if you bought it on the open, right? So that's kind of what I was trying to decide, because I did do, of course, came out with our watch list. And Okta was on my list because of the how this thing looked, right? A lot of sideways action, and now trading above the August value area, a very thin value area, which we've been seeing, right? And that can be from time to time. You could see a pretty aggressive move when these things tighten up, but this isn't as tight as we've seen some of these others. But this was a nice it ended up being a day trade for me. I wanted to hang on to the last portion of the piece, but I just saw too many things giving back their giving back their gains, so I took that position off. GTLB, I also took another target. Again, I think the thing was trading at $69. So when you see these momentum names and you get the momentum, yes, I am a seller into that strength. So that's the main story for me and what I did today. And I really didn't do much trading past you know, I didn't do anything really past 11 o'clock today in terms of new trades. It was just managing some trades. BIG, which is another name that has huge short interest. Again, I don't have a fundamental reason for being in big lots. If I'm going to trade this space, it's going to be Costco. That's the name that I trade because it has relative strength and is a much better run company. Home Depot is another name that I was looking at today, as that was one of our watch list names. So again, it's tough when all your alerts go off in the first 15 minutes. You do have to pick and choose. Remember, we had a day like this last week. It was the only day where the market, where the indices really rallied hard. That was last Wednesday, right? And but this was a little bit different. The market was just a little bit too hot in the beginning of the day. And one name I took off, and this is kind of one of my favorites too, but I just didn't like the weakness. And as long as this stays in here, right, above value, I may revisit. But I'm very cognizant when something doesn't look good, from the start of the day and where other names are having a great day. This thing's basically was up just slightly for the day and then started to sell off. So you could always get back into names. People think that you can't do that, but you can. What I do as soon as I get out of a name that's not acting well is I put an alert right back, and if I get back into it $2, or $1, $2 higher, that's fine, because I'm looking for like a bigger move, right? I don't care about $1 or $2. I would rather be protecting my capital, and then possibly looking for a move up to 95 or 100. But I need to see it like get at least back above these moving averages, and even better, back above 90. So here's our, we put together at Tribeca Trade Group a watch list every weekend. The names that are in green, this was another frustrating one today too. And again, I took a target in it, but I've been waiting for this Deckers, and I think it looks okay, because on the 1 hour chart, it did break out of the range, and I took my target in the beginning of the day, as I should, and it did come back. So if I wanted to, I could add the target back. I didn't do it because just a little bit too weak of a looking candle. But we saw a lot of these bull flag patterns, right? So I am looking for more in this name. Again, I took a target. Now I have some wiggle room if I want to add that back 327, 312. But that's my again, these are some of the names. A couple other names. EVH, I was able to hit a target in too. So it's crazy, some of the intraday moves today. But I think I took a target at EVH 36, right? This was also a name that I added on Friday, right? So again, and then I took another target. I guess I got 37. Oh wow, no, that's the previous day. But yeah, I managed to get 37 in this today, so that's fine, right? And if it hangs in here, and if it holds above, I've got that wiggle room now, right? I took profits higher. I could certainly get back into it. I did that a couple weeks ago with GTLB, right? I kept taking profits in the beginning of the day because it would be strong, and then it would give back profits, and I would end up adding the target back, and then the next day I would take the trade, take off, take the name, take a healthy target, and then I would add it back again. I did that a couple times during the month, and then I finally bailed on it. But this was a good example too. I had bailed on this name, and once it kind of started to head back up, I put the trade back on, right? And I got the majority of the move at this point. So again, the key is monitoring the names, right? Because you certainly don't, in this type of market where everybody seems to be called, this is a bear market rally. I don't know what's up with that term and why it's used so frequently. Helene Meisler put out a great note in her column about why people need to frame things that way. I am completely open to all outcomes in this market, and we'll trade how it goes along. But right now we are consolidating. I keep hearing that too. Another thing that I keep hearing is, oh, we just got rejected, right? And we're going lower. We're still holding the 5-period moving average. So yes, the indices have slowed down. You have to be cognizant that if they do duck back under, the 5-period moving average, maybe you get a little bit of trouble after that. But again, sometimes it's just the market will do this where it will consolidate like this for a couple days, and then it will make its push either up or down, right? And if it does break down here, maybe it comes in and tests the 20-day moving average. And I don't think that would be a horrible thing. You just have to be positioned for it correctly, right? Because if we come in and we test the 20-day moving average, right, everybody's going to start shorting again, right? We're going to get all the sentiment, the short-term bullish sentiment that's been in the market, that will come out of the market, right? And that's not a horrible thing. So, I'm okay with that without outcome. I'm also okay if we end up turning higher here too. But bottom line is, right, we're not really getting I mean, yes, we did try to go higher, and that is true, that we tried to go higher and that did get rejected. But we're also not breaking down either, because there's no break even below the 5-period moving average, right? So I've got a pretty tight line on here. It's actually the 5-period exponential moving average, right? And if you look at the Qs, now the Qs did look weak, but they're, because they started higher, right? So they had more of a reversal, but they're not breaking below the 5-period moving average either yet. So again, if it happens, so be it. It's fine. I've been selling into that. And you could see the only trade that I kept on from today was this GTLS, which is a starter position, because I think I've only traded that name once, and it's a little bit of a thin name. So that's really the only thing that I added. Everything else I was a seller. And so, let this market go where it wants to go. And, we'll certainly go from there. A couple names, that I had, that I think one of the better names that I had on my watch list was Wayfair, up about 11% from the trigger. Again, a lot of these things were showing a lot more strength during the beginning of the day, which is fine. But again, this is I think I've been mentioning this in just about every one of my videos over the last week or so, but look at how thin this value area is, right? Again, it's the same concept of coiling. When you've got 3 moving averages wrapped around one another, you've got a lot of charts that look like this, right? That after they've moved down, they've went sideways and had some tight consolidation, and now turning the corner and moving higher. I thought this was going to happen with Wayfair last week on earnings, but it actually didn't really do much. So off to the races today. Another one that was brought to my attention in the trading room, again, I don't really trade pot stocks, but if you want something really highly speculative, doesn't this look like a similar pattern, right? Big, long downtrend in this name, right? Where did this thing top out? I'm just curious, $67, right? But now look at it. This value area is the thinnest I think that this stock has ever seen, at least from all the way back in here. Right. So, it closed at 550. Maybe you see move up to 620 or even $7, but it also looks like it's ripe for some type of squeeze. All right, guys. So that's it. I didn't go over, I don't think there's really any major thing, conclusion out of today's price action, other than for the short term, notice that we kind of started. So this is the 1 hour value area, right? So this value area we get for the whole week. On the 1 hour chart, it's based on all of last week's price and volume, right? Because we're using volume at price, right? And so this week's value area, it looks like price is like right at the top of value. So this could change. Don't forget, for some reason, I thought it was Tuesday, because I think usually the CPI report comes out on Tuesday, but we get the CPI report on Wednesday. So I would watch this 41.52 level. Again, short term, you can often get the clues, ahead of time. in terms of, you know, rather than just looking at a daily or weekly chart, you could get direction and support and resistance pretty decently off that. NASDAQ is still going to be inside the value area for the week, right? And I'll give you a level for the Qs because I know people like to look at the Qs a little bit more than NASDAQ futures. And that's right around 322.76. IWM is doing something different and is trending and is above value for the week. By the way, you know, because I talk about bonds just about every one of these videos, right? We had that big sell-off in bonds on Friday. Bonds were strong today, right? So the ZB, right, the 30-year bond futures were up 1%. Now again, so number one, they're above the value area for the month. That's good. But they're still kind of below this 20, right at this 20-day moving average. So I would like to see a little bit further move for that. But overall, nice to see bonds rally after that big down day on Friday. All right, guys, that is it. Have a great night, and we'll go from there, guys. See you in the trading room tomorrow. Thanks.